and welcome to Finextra. I'm Emily Haller at Cybor's 2015 and I'm here with Paul Thomalla of ACI Worldwide and Jeremy Light of Accenture. Thanks very much for joining me. So Paul, why was this report written?
Well, I think the interesting thing is that I've been traveling all around the world. Jeremy's been talking to people all around the world, and actually there are a lot of misconceptions about what real-time immediate payments are. And it tends to be that people have come from one particular silo and they then try and think of it from that context, which unfortunately leads them perhaps a little bit awry.
Key definitions around clearing and settlement. Clearing is the posting of funds on the beneficiary account, but typically that is done with bank money and the banks then have to settle later or settle between themselves. So the settlement is between banks. Now clearing can be done on a bilateral basis, sort of one bank directly with another bank, or it can be done centrally through a hub such as a clearing system. And settlement is typically done through a central bank and sometimes with a commercial bank, where each individual bank will hold accounts and settle between themselves either several times a day or in real time.
And how do immediate payments differ from card and RTGS payments?
I think it's actually about the individual's experience, whether it's on a corporate side or it's people like you or I. But the experience when you do a card payment is the authorization is done there and then with your card. But actually in the background, it's going to take quite a while, and you don't really know where monies are, how long it's going to be till the money's taken. That's an unusual experience to have. Well, if you think about it from a corporate point of view, it's kind of the same thing. Payment starts off, goes from one bank, it'll get posted to another bank, and so on and so on. You don't actually know when that's going to happen. You've got a reasonable idea, but it could take a long time.
Yeah, and the way I look at it is in terms of synchronous versus asynchronous processing. The key feature of a real-time payment is it's synchronous. So in one continuous action, you send the payment, the beneficiary receives it, it gets posted to their account, and the confirmation comes back to you as a sender that it's done, and that's all real time. Whereas in the cards environment, that doesn't happen. It may be authorized real time, but the funds reach the merchant 2-3 days later, typically, and you as a consumer, the funds will come out of your account maybe next day or even later. So it's not a very good experience. Similarly with RTGS, that is it may be real time settlement when it's at the central bank, but the end-to-end process is asynchronous, and it can take the course of a day to complete from end to end. So that's the key difference, the difference between one continuous interaction which takes seconds or less versus a discontinuous interaction that can take a day or more.
Jeremy, what are the key features?
One of the key features is that complete synchronous processing, so you send it and you get confirmed immediately. Another key feature is obviously the speed of the transaction. Typically people say that 5 seconds is a sufficient enough response time. My view is actually needs to be sub-second, because there are use cases out there, such as in transportation, where sub-second is required. Other key features are things like the messaging. So typically now a real-time payment system will use the ISO 20022 messaging standard. And this standard will need to be a lot more sophisticated than its current use in batch processing, again for this asynchronous sort of sending and receiving the confirmation back feature of real-time payments.
And Paul, what's the business case?
Well, I think it's an interesting question, right? Because what you hear over and over again is a bank is asking that question. What is the business case for the bank? And often that comes from a part of the bank which is saying, I've got my business here, whether it's ACH or it's my RTGS business, whatever it is, and actually why would I move to instant payments, which is actually going to take money away from that portfolio? And in some regions, you have to say there is a higher body, a regulator saying, actually this isn't about the bank, this is about the region, the good for the country. So the business case sometimes needs to be thought of at a higher level, i.e. the UK, the US, what have you. Because if you're just trying to think about it in terms of moving my ACH over to instant payments, per se, there isn't a business case. But I do think there is a business case, Jeremy, don't you?
I agree. It comes down to the customer proposition. As a bank, you want customers to use your accounts, to fund those accounts, and to do that, customers have got to want to use them. We're seing that person-to-person payments, P2P payments for real time, combined with social media is a very potent combination. And that's a very good way to get volume and to get consumers used to using real-time payments. And then where the business case comes in from a pure revenue perspective is then migrating to consumer to business payments, so at point of sale, e-commerce, m-commerce. And I think there's a very strong business case when you look at it from that perspective.
And I think the other thing that we've seen just here at the show is that some countries are saying they want to get a first mover advantage by turning that into a digital space and growing very, very quickly. It'll be interesting to see whether that business case per country works as well.
Yeah, and the other point to make is, we're talking about the pros and cons of real-time payments now, but the reality is in 5 years' time, all payments, certainly all mass payments, will be real-time, and anyone who doesn't offer it doesn't really have a business to be in.
Okay, and I know that you also have done a review of several countries in projects in the book. Paul, thank you very much. Jeremy, thank you. And thank you for watching.